Welcome everyone to this week's episode where we're going to be talking about guaranteed retirement income, something that I think everyone would like. However, there are some downsides that come with it. And we're going to talk about the pros and cons. So again, I'm here with Senior Investment Manager, founder of Inception Financial Services, Edward Schuh. Welcome. And Brian Walker, president of the AFI Group, financial advisor. Brian, welcome to today's episode.
Thanks, Robert.
Well, guys, guaranteed retirement income, which in most cases people assume annuities. And some people don't have a good association with annuities. But let's step back and look at the big picture. Ed, can you give us some other types of guaranteed retirement income that people don't think about?
Sure. Yeah. I mean, one of them is, heading over to Vegas and throwing your entire retirement on black on the roulette wheel. That's, oh, no. Oh, guarantees. Okay. Well, for most Americans, the cornerstone of guaranteed income is going to be Social Security. And that's a benefit that almost everyone, there are a few instances that some people may not get the Social Security, but then there's also people who get pensions, which are, there's fewer and fewer every year that are getting pensions, but for those who have that is a great form of guaranteed income as well. And then you mentioned the final one, Robert, which is the annuities. And you mentioned kind of some of the negative connotations associated with those annuities, and I think we can kind of address some of those, because there are certain annuities that will fit for the right person and the right circumstance. So it's just ensuring that we have the right tool for the right plan.
Right. And Brian, I've always heard you make the comparison between annuities and Social Security.
Yeah, I know a lot of people might say, hey, I don't like annuities or this or that, but I'll have to tell you, if you like Social Security, then you like annuities. And if you like pensions, you like annuities, because they all work the same way. You have a lump sum of money that's going into some type of investment. It's earning a return. And based off of that, they're giving you a guaranteed income, whether it's for life or for a certain period of time.
Right. Edward, let's take a closer look and break that down. How does someone determine if and how much guaranteed income a family might need?
Well, there are a couple factors that you want to take into consideration. And one of the goals that we look for is ideally to try to meet whatever the base need is. And so if we take pension, if they have that, if we take Social Security, that benefit, which we definitely want to maximize that type of guaranteed income. But pension, Social Security, and then we take a look and see, is there a shortfall just for the, as I mentioned, the base needs? So to pay for the home, place to live, car, electricity, gas, phone bills, utility bills, all of those. If we can have guaranteed income that covers those base needs, then we found that people feel substantially more secure in their retirement, and we can take more moderate risk with other investments that are within the plan as well.
And if taxes become the deterrent, Brian, is there, and they still want that guaranteed income, is there any alternatives?
Yeah, so the first alternative when we're talking about annuities and taxation is a Roth annuity. So you always have that option. Just remember, when the money goes into the Roth annuity, that's already taxed money. So it does grow tax-free. And then when the money comes out for the income, it comes out tax-free as well.
Let's talk about what is an annuity and what annuity options people have when considering how to supplement their guaranteed retirement income.
Well, there are a variety of annuity options out there. So you do have to figure out which one is best for you, given where you're at in your process of retirement and income. So there are variable annuities. Variable annuities have a lot more risk, but they also have a lot more upside potential. And then there's fixed indexed annuities that are very stable and steady growth. They typically do not go backwards. They have a 0% guarantee, no matter how the market's doing. So those typically are better utilized later in the game when you're saving for retirement or maybe even in retirement.
Yeah, Edward, how do you feel about the different types of annuities when somebody's looking for guaranteed income? What option stands out for you?
Well, definitely not the variable annuity. Generally speaking, the variable annuities have higher fees that are associated with them, but they can also go backwards because they are subject to market risk, essentially. So I would definitely avoid those. For guaranteed income, generally you're going to want to utilize either a fixed annuity, where you get just a guaranteed rate for the life of the annuity, or a fixed indexed annuity where it tracks an index but is guaranteed never to go backwards. You can usually outperform most of the fixed rates with where interest rates are right now.
Brian, is there any case in which people would want to not opt for the guaranteed retirement income rider?
Yeah, definitely. So if a family or an individual is in a situation where possibly that guaranteed income can cause more taxation for them, they might want to have a little more control and not utilize that rider, and use that annuity as similar to the bond portion of their portfolio, or maybe something that performs a little better than a CD in the bank. Because what it does is generally you'll have some decent performance, compared to a CD, maybe even a bond. You might have a little better performance. You have the downside protection. But at the same time, if you need to supplement some of your income for whatever reason, you can take out what you need. Obviously, it would be taxable at that time, but that's your prerogative. You get to control that and control how much taxation you're willing to take year over year.
Right. Ed, can you give us or show us an example of trying to calculate how much someone would need to invest if they determine they needed an additional amount? They know that amount, maybe they wanted an additional $20,000 a year in guaranteed income. How do they figure out how much they need to invest to get to that number?
Sure. So let's take a quick, this is the calculators page on the website. So what we can do is we can take a look and we'll see if we do a deferred annuity comparison. And we can put in how much we want to deposit. We'll just use $100,000. And if we wanted to say, hey, there are some annuities that we can contribute additional to over the years. So depending on our age, we may want to put some in, we may want to increase contributions. And let's say we need to take our income in 15 years, and we're going to average 4% within our annuity. We can take into consideration tax brackets, and let's see what happens. And this is going to do a comparison for us to show us if we do the deferred annuity, how much more it will grow as opposed to just investing those funds and paying taxes along the way. Now we can take that amount, which shows that it would grow to about 180,000. And if we just take a percentage of that, say, 5%, now we're looking at roughly 9,000 a year in guaranteed income.
So if you'd like access to that very powerful tool, Retirement Income Planning Education app, you can text the phrase Retirement Shield to 36260, or you can click on the link below. We also have links to our webinars below in the notes. Feel free to take advantage of all that complimentary education and resources. And if you just want to keep it simple and have Brian or Ed calculate the numbers for you, all you have to do is reach out and request a complimentary consultation, and they'll run any of those numbers for you, absolutely complimentary. It takes a quick phone conversation, and then they'll put that report together, and they can do a screen share and get that report to you. Super, super powerful tool, and you guys appreciate the time you guys have spent helping so many families. And now, because we're online all over the country,